Have you ever stopped to think about what pollution actually costs? I don't just mean the cost to the planet, but in actual dollars and cents. Well, what if I told you there's a massive multi-trillion-dollar global market that does exactly that? It's a system designed to make polluting expensive, and it's changing the way huge companies operate. So how does this invisible market even work? It all starts with a pretty surprising number from a very famous company.
Take a look at this number, $1.78 billion. That is a staggering amount of money, right? Now, what if I told you this is how much one of the world's biggest companies earn from its direct competitors without selling them a single one of its main products?
You heard that right. In 2023, Tesla pulled in almost $1.8 billion from other car companies. I mean, this is a revenue stream that has, at times, been the one thing keeping the company profitable. But how? It's not about the batteries, it's not the software. The answer is something you can't even see.
The secret is a global system that has literally turned carbon dioxide, CO2 emissions, into a tradable commodity. We're talking just like gold or oil or wheat. This whole idea was born out of huge international agreements you've probably heard of, like the Kyoto Protocol and the Paris Agreement.
And that's where we get the carbon market. The entire point of this thing is to try and solve a really tricky problem by putting a price tag on pollution. But to really get how Tesla makes a fortune from this and how it all fits together, we need to get two very important terms straight.
Okay, and this right here is where most people get tangled up. We're talking about carbon credits and carbon offsets. Now, you'll hear people use these words like they're the same thing all the time, but they're not. They are fundamentally different products traded in totally different ways for completely different reasons.
Let's just put them side by side. On the left, you've got carbon credits. Think of these as part of a mandatory government-run system. They're basically a permission slip to pollute. Then on the right, you have carbon offsets. These are totally voluntary, and they're all about balancing the scales by funding projects that are actively sucking CO2 out of the air. So a carbon credit, sometimes called an allowance, is literally a permit. It's issued by a government or a regulator, and it gives the company the right to release 1 ton of carbon dioxide equivalent into the atmosphere. It's all part of a system designed to make polluters pay for their emissions.
Now, a carbon offset, that's a totally different animal. It's a certificate that you choose to buy. It represents 1 ton of CO2 that's been removed or stopped from ever entering the atmosphere because of a specific project, like planting a forest or building a wind farm. You see the difference? You're not buying permission to pollute, you're paying somebody else to clean up.
Now, these two different products, the credits and the offsets, they don't get traded in the same shop. They operate in two completely parallel universes. You've got the mandatory compliance market, and then you have the totally separate voluntary market. On one side, you have the compliance market. This is where the big regulated industries like power plants and airlines have to play. It's the law. They trade those carbon credits to stay within their legal emission limits. On the other side is the voluntary market. This is for anyone, companies, you, me, who wants to offset their carbon footprint by buying carbon offsets. One is a must, the other is a choice.
So how does this giant mandatory compliance market actually work? Well, it all runs on a really simple but powerful idea called cap and trade. Basically, regulators set a cap, which is just a hard limit on the total amount of pollution allowed for an entire industry. And, this is the crucial part, that cap gets lower and lower over time, forcing everyone to get cleaner.
And here's the trade part. Let's make it simple. Imagine the cap is 300 tons. You've got company 1, maybe an old factory, that pollutes 400 tons. Oops, they're 100 tons over the limit. But then you have company 2. They invested in green tech and they only polluted 200 tons. They've got 100 tons of their allowance just sitting there, unused. So what happens? Company 1 buys those 100 extra credits from Company 2. Company 1 avoids a massive fine and Company 2 gets paid for being efficient. That's cap and trade. And when you look at the money involved, the difference in scale is just wild. The compliance market, with all that required trading, was worth about $1.5 trillion in 2024. Yeah, trillion with a T. Now, the voluntary market was way smaller, about $2.5 billion in 2023, but here's the kicker. It is absolutely exploding. As more companies make these net zero promises, analysts think it could skyrocket to $100, maybe even $250 billion by 2030.
So, who exactly is in this ecosystem? Who are the players making all this happen? Well, it's this fascinating mix of polluters, innovators, investors, and idealists, all interacting in these two markets.
You've got your buyers, which are usually those heavy industries that need more credits to cover their emissions, and then you have your sellers. These are the super efficient companies like Tesla, who have extra credits they can sell for pure profit. Then, in the voluntary market, you have the offset generators, the folks actually planting the trees or building the solar farms. And of course, you have investors looking for a return, and all the environmentally conscious companies and people who just want to do their part.
But here's a really crucial detail to understand, especially in that fast-growing voluntary market. Not all offsets are created equal, not by a long shot. Some are considered way more powerful and way more valuable than others.
And that brings me to something called blue carbon. These are special, premium-grade offsets that come from restoring coastal ecosystems. We're talking about amazing underwater forests, mangroves, seagrasses, tidal marshes that are absolute beasts when it comes to capturing carbon. And this is why they are such a big deal. Get this. Pound for pound, scientists have found that mangrove forests can suck up and store up to 4 times more carbon than a land-based forest like the Amazon. 4 times! That is a massive difference. They are incredibly dense, efficient carbon-trapping machines.
But it's not just about the carbon. That's the key. These ecosystems also act as natural water filters. They protect our coastlines from storms, and they're critical habitats for all sorts of marine life. It's all those extra benefits, what the experts call positive second-order effects, that make a single blue carbon offset worth so much more. Okay, so with any system this huge, this complex, and with this much money flying around, there's obviously a giant debate. Is this entire trillion-dollar enterprise actually helping fix the climate crisis, or is it just creating a really convenient, complicated loophole?
The arguments on both sides are pretty strong. The supporters will say, look, this creates a real financial reason to be green, and it funnels money into crucial environmental projects. It also buys time for heavy industry to make that slow, expensive shift to cleaner technology. But the critics raise a huge red flag. They warn that it's incredibly hard to prove the real-world impact of some of these projects. This creates a serious risk of greenwashing, where a company just buys a bunch of cheap, maybe sketchy offsets so they look green without actually changing their polluting habits at all.
And that really is the trillion-dollar question we're left with, isn't it? Is this system a brilliant, practical tool that's using the power of the market to solve an existential problem? Or is it just a very sophisticated, very clever way to sell a license to pollute? The answer is probably somewhere in the middle, and figuring it out is going to shape our economy and our planet for decades to come.